And thanks for staying with us, everyone. In our first story, the National Petroleum Authority has directed oil and marketing companies and other players to increase the Unified Petroleum Price Fund and the BOS margins on fuel beginning today. The move might force some oil marketing companies to reverse the recent reduction in prices at the pumps. Let's get some clarity now on this directive. Communications Manager at the National Petroleum Authority, Mohammed Abdul Kudus, joins us. Thanks for your time this afternoon. So what are the reasons for the directive to increase these margins? If you can hear me, sir, what are the reasons for the directive to increase the margins?
Can you hear me?
Loud and clear.
Hello? Yes. So the BOS margin and then the UPF margin are margins that regularly are reviewed based on the economic dynamics, because it takes certain variables in determining what margin should be for BOS, what margin should actually be for UPPF. For that of BOS, I think the management of BOS would be better place to give the justification or the rationale for it. But as we all are aware, it is supposed to be for the management and maintenance of the various facilities that they have that helps us in holding the fuel across the country. And it is normally the determination of what goes into the management and the keeping of those infrastructure that determines what margin should actually be put, so that they will be able to get what is supposed to be required to be able to do what they expect to do. But like I said, proper explanation could actually be gotten from them. But talking about the UPPF, which is virtually used in defraying the freight costs of transport of fuel. And here it talks about the cost of the fuel that they themselves buy, because the very cost at which we buy fuel actually is the same cost that they buy in transporting the product using their BRVs. It also includes the cost of maintenance, the cost of insurance, the administrative cost that they incur, what they actually use in paying the driver and the maid. All of it comes together to determine how much the margin should be at a given point in time. So anytime there is a revision, particularly on the pricing of petroleum products, particularly when it goes up, there's a likelihood of a need for it to be revised upward, as I alluded to initially, because they also buy the same fuel that you and I go to buy in carrying out with their transport. Anytime the cost of fuel actually changes, it could actually affect the cost of their transportation. The last time the adjustment was done was in August, and if you remember at that time, the price of diesel particularly was around 13 Ghana cedis. And between August and now, there had been a change. It went to 23. Today we are talking between 19 and 20. Certainly, there has been a variation in the cost, and it also affects their cost of operation. So anytime these dynamics occur, we come to the table and have a discussion minded by what it is that is supposed to put them in business, minded by what it is that we should put on the price bill that would not affect the customer that much. And so we should be able to draw that critical balance that would allow them to still be in business, and the consumer would still also be able to get the product to buy. If they are not in business, what it means is that you and I might not be able to get the product to buy.
And that's fair. Well, I guess the difficulty for some people is the timing of this announcement, especially when some oil marketing companies have started reviewing prices downwards.
Oh, we have a regular interface with the oil marketing companies. Before the opening of a particular pricing window, we would have a communication as to the inputs that should feed into the price build-up. So they were aware before the first, that is today, that the margins were supposed to really be incorporated into the build-up. So it is not something that they were not aware of at all. But like I said, this is a critical balance that we all at all times must always be drawing, so we keep them in business and we keep the product available so you and I can go and get them.
Well, did the MPA consider the impact of this directive on prices of petroleum products, as prices could be going up?
Absolutely, and that is why I was actually alluding to that we are minded by their requests. Obviously, what they request is not what we give, okay? Because yes, they are private people, they are business people, they ought to be in business, and they are minded by the return on their investment. We are equally minded by the effect of what they request on the ordinary consumer who goes to buy. So we ultimately would be minded by what is it that would be added that would not actually be so adverse to the consumer when he or she goes to the pump to buy the product. So as we try to be minded by the effect of the consumer, we are equally guided by the interest of the private transport operator. So we draw that critical balance so we'll be able to bring a certain win-win situation for all of us. And as you would agree with me, it has not significantly affected the expected reduction in the price of a petroleum product for this particular window. We are seeing a lot of the OMCs out there actually reducing their prices, albeit at different degrees of percentages. But obviously, there have been some reductions out there.
All right, and so we are also getting indication that some of the OMCs would be willing to absorb the increase. I don't know if you have any way of corroborating that, but how do you welcome that?
Oh, they normally have a way of keeping themselves in business. It's a free market out there, and everybody is trying to be in business. So your price build-up or ultimate price that you sell at the pump determines how competitive you are and how attractive you are going to be. So depending on the degree of its effects on their profits at the end, they might want to consider absorbing it if it would not actually affect them that much. So we don't have that conversation. But if they do that, I think that for myself and you who are first of all consumers of petroleum products before where we work, would be saying glory to be to God and thankful to them for actually absorbing that.
All right, Mohammed Abdul Kudus, Communications Manager at the MPA. I appreciate your time with us this afternoon. Well, let's turn to some other news you're following for you. Insurance premiums for all category of policyholders will go up from the 1st of January 2023. The National Insurance Commission has approved a request from stakeholders in the insurance sector for these premiums to be reviewed due to the current economic conditions. Now, based on this review, vehicles that were registered after the year 2020 will have a premium mark of 38% for all risk categories. Also, third-party property damage will now have a cover of up to 6,000 cedis as minimum. The regulator has also approved an increase in the minimum personal accident cover to 7,000 Ghana cedis. Now, some policyholders are already raising some concerns, as it's still not clear for now how some of the insurance companies will implement these reviews. Stephen Kwatienboa is Vice President of the Insurance Brokers Association of Ghana and joins us with some perspective to the story. I appreciate your time with us. What is the rationale, as you understand it, behind this increment?
Thank you very much, and good afternoon to your listeners. From 2019, motor insurance, third-party motor insurance tariffs have not been reviewed. And you all know that prices of everything have gone up since 2019. And now it's becoming practically impossible for insurance companies to be able to carry the risk at a higher cost of repairs. You know, when people have accidents, they go to the market, they bring them repair bills. The repair bills have more than tripled, but premiums have remained as they are. So I think that is only fair, even in spite of the current economic conditions. I think that would have been the right time. The market was already discussing increasing premiums to ensure that insurance companies will be able to honor their claim obligation. To share some few statistics with you, based on the 2021 annual report from the National Insurance Commission, insurance companies are actually spending 1 cedi, 1 peso on every 1 cedi premium they generate. We have something we call combined ratio, which is a combination of the expenses incurred by the insurance companies plus claims. And already the two put together is higher than the premium that are being earned. So it's either they do something about it, or most of the insurance companies will collapse and they will not be able to provide the cover that is needed. So I believe that it is the reason why we are seeing these premiums slightly going up. Honestly, if you ask me, I think that even the rate at which it has been increased is not sufficient, but the market will try and manage with this so that everybody will continue to stay afloat.
So would this mean a corresponding increase in benefits and or claims?
Yes. So there has also been a corresponding increase in the benefits, because we know that the initially, for example, third-party property damage had a limit of 5,000 cedis. It's been increased to 6,000 cedis. That means if you take the very basic cover and you knock somebody's property or somebody's vehicle, you have up to 6,000 now. Another significant one is the personal accident. Personal accident has been increased tremendously to 7,000. So the occupants of the vehicle, those that have occupants that can claim under personal accident, you have up to 7,000 cedis, because the industry also appreciate that medical treatment has gone up. So that has also been increased, which is good for us. So there's been corresponding increase in the benefit associated with the tariff. Yeah.
So given the economic situation, is this increase justified?
I would say that I think that we had a very strong regulator who has always been there for the public. But I think he tried to find a balance between the public and the insurance company surviving. And as I told you, since 2019, so you are looking at more than 3 years now, premiums haven't gone up. But everybody is in the same market. Look, cost of fuel, cost of everything has gone up. So the operational expenses has actually gone up for the insurance companies. So if you look at averagely between 26 and 38%, I'll tell you that it is really, really on the low side for a 3-year period. But we are all looking at the economic condition. We are also concerned about the plight of our customers. And that is why I believe that the market decided to come to this level, which I'm sure should be enough for at least the insurance companies to break even on the motor lines. Otherwise, it will be difficult for them to provide a cover.
My final question, you're a broker. What impact is this likely to have in your business?
Well, I would say as a broker, it's good news for all of us, because we all stand to benefit, because my operational cost as a broker is also going up. The costs that I incur to service the client's business is going up. So it's a win-win situation for all of us. And as a broker, I'm much particularly interested in the interest of our clients. There's no point in buying insurance when insurance companies don't have the financial strength to be able to pay the claims. We are always concerned if claims delay. So for me, as a broker, I believe that when the market, we all embrace it and we support it, we will have insurance cover that will be adequate to be able to provide the compensation needed by our clients. So when we have claims, insurance companies will be in the position to be able to pay the claims for us. And that, for me, is something that is good for all of us. Thank you.
All right, Stephen Kwawu, Vice President of IBAG, appreciate your time with us. You're watching The Marketplace. Economist Dr. Daryl Kwawu is calling for withdrawal of the over $1 billion Heritage and Stabilization Fund invested overseas. According to him, the fund has generated a 42% return on investments, which he describes as not good enough. Speaking to Joy Business, Dr. Sarkodie said the fund should be invested in Ghana and the returns used to finance infrastructure projects.
Ghana government has saved part of its oil revenue in Heritage Fund and Stabilization Fund per my checks. These two funds have accumulated over $1 billion US, and this amount invested outside of the country, earning only 2% maximum, 2% nominal interest rate. In cases where the inflation rate is higher than the 2%, it means that we are earning negative real interest rate. Meanwhile, the government of Ghana goes to the same foreign market, capital market, to borrow at 7, 6, 8, 9%. It is my humble appeal that the government of Ghana, together with the Parliament of Ghana, to revise, their notes and then pass a law or revise the Act of Parliament and allow the government to withdraw the over $1 billion Heritage Fund and Stabilization Fund to be brought home, and it can be invested here. So I'm going to outline ways that can be invested here. 1, portfolio investment. Government of Ghana can borrow from that fund and pay in dollars and pay, say, 5% or 6% or an agreeable percentage. 2, the fund can be converted into cedis and used to buy government bonds in cedis, and then government to pay interest to the fund. In this case, I'm talking about the Heritage Fund and the Stabilization Fund. 3, it can be used for physical investment, something like road or railway. I prefer railway because railway line can last for over 100 years, so that the future generation for whom we are saving the funds can come and enjoy the railway line. And my last recommendation is that it could be used to dualize the Accra-Kumasi Road and put tolls on it, collect a revenue and pay back. Thank you.
In sector this afternoon, Ghana is still a preferred destination for the aviation sector development. This is according to Regional General Manager for TAG Angola Airline, Diane Chang. Now, speaking to Joy Business during his maiden flight to Accra, Chang noted that the move was a deal with the demand for the route. Here's more from James Ishan.
The Luanda-Accra-Luanda connection will have 2 weekly frequencies, with flights leaving Accra on Thursdays and Sundays. It will be operated by a Boeing 737-700NG aircraft with 120 passengers as total capacity, 12 in business class and 108 in economy class. Diane Chun stated that the start of its Ghana operations would allow TAG to offer a key connection between Ghana and Southern Africa, Europe and Brazil via Angola. This new route suits the corporate segment needs of the Ghanaian market.
Accra is an important market. Well, the whole of West Africa is very important to TAG. TAG is expanding throughout Africa, and we've got an eye very much on Ghana. Ghana is, we have very good relationships, very good diplomatic relationships with Ghana. What we want to do is improve those economic relationships as well. Today's flight is the first flight from that TAG has flown to Ghana for several years, and we want to have this close economic connection. We are obviously now the quickest way to get from Luanda to Ghana, and we're hoping that we're going to, between us, our 2 countries are going to improve economic relationships. We have a great diplomatic relationship already. So for us, Ghana also, we see this as very much a gateway into Africa, because Ghana is a very popular place at the moment for conventions and events. So inbound tourism, inbound conventions, inbound conferences. So together we think our 2 countries can work very, very well together. We want to build those economic ties.
Ghana's ambassador to Angola, Mavis Kusobo, said the move is to foster relationship between Ghana and Angola.
I must say that this is a very important occasion. The commencement of the TAG flight to Ghana marks the beginning of a new phase in our diplomatic relations. We have been in Angola since 1976. The political relations have been good. The bilateral relations have been excellent. But on the economic front, we have not been up and doing. And therefore, it is a very important occasion, because this is going to mark the beginning of increased people-to-people interaction, for economic interaction to also be enhanced.
Based in Luanda, TAG Angola Airlines EP is the flag carrier of Angola and operates domestic services with Angola, medium-haul services in Africa, and long-haul services to Brazil, Cuba, and Portugal. James Asian's report for Joy Business.
Well, tomorrow is Farmers Day, and we have some stories from the agri sector for you. The Executive Director of the Peasant Farmers Association of Ghana, Charles Nyaba, has said that the 2023 budget failed to tackle issues affecting the agri sector, especially government's flagship program Planting for Food and Jobs. At a stakeholder forum in Accra, he said limited supply of input, lack of quality seeds and expired fertilizers from the initiative are key areas that the 2023 budget failed to address. There's more in this report.
Speaking at an agri stakeholder forum on the 2023 budget, Executive Director Dr. Charles Nyaba stated that they expected the 2023 budget to address key issues such as poor quality of seeds and fertilizer that are hampering production in the agricultural sector.
So what we were expecting the budget to do is to take advantage of these shortages by putting in money. Okay? What led to increase in cost of production? Reduction in the subsidy for fertilizer, high cost of mechanization services. So we're expecting to see the budget allocating huge sums of money to ensure that suppliers of inputs under the PFG are all paid. That there is huge subsidy for mechanization services, so that we, those who get them, will be able to provide services to other smallholder farmers, so that when they produce, the cost of production will go down.
The chairman of the Competitive Africa Rice Production, Yao Edupoku, added that government needs to engage farmers on the agri insurance policy and for them to accept it before it is implemented.
This is a government policy, and government policies are, to me, well thought of program that the government want to pursue. What we are saying is that, yes, it's a laudable thing, the agri insurance policy, but we, the stakeholders, we, those on the ground, should have been consulted, made aware, so that we will be able to buy into the program. For example, my farmers and I, we don't know what agri insurance is. Is it like the health insurance or car insurance, or is it a totally different program from the normal insurance things that we know? These are some of the things that we should have discussed before even going into Parliament or being captured in the budget.
The Peasant Farmers Association also indicated that government agricultural insurance policy must prioritize investment in structural challenges in the agricultural sector that is limiting the productivity and potential of farmers.
Union for Conservation Nature has supported farmer groups in the Upper East and Upper West regions with farm equipment to help them improve on yields and reduce post-harvest losses. A total of 20,000 farmers will benefit from the donation, which includes a multi-purpose thresher, weighing machines, and roller planters. Correspondent Albert Sori has more.
The International Union for Conservation of Nature is working to improve food security and sustainability in the Sahel areas of Africa. The union has been working with farmers under a project called Creating Lands of Opportunity, Transforming Livelihoods Through Landscape Restoration in the Sahel. The 3-year project is funded by the Italian government through the global mechanisms of the United Nations Conventions to Combat Desertification and is being implemented in Ghana, Niger, and Burkina Faso. In Ghana, the project is located in the Upper East and Upper West regions. It is being implemented by the Savannah Agriculture Research Institute of the Council for Scientific and Industrial Research, Arusha, Ghana, and the Environmental Protection Agency. Idrisu Yahaya is a research scientist with the Savannah Agriculture Research Institute.
Our objective is to improve crop productivity and link farmers to markets sustainably. So as part of our project, we have developed a value chain plan with the farmers, and the farmers selected 2 value chain crops. soybean and maize. Now, to improve quality, we need to improve plant population on the field. So, thereby providing the rural planters for them to improve their planting activity due to the labor shortages in the communities. Also, we are providing skills for them to standardize their produce and tarpaulins to give them clean produce so that they can have space to have to dry, and during harvest, we will not harvest with stones.
Smallholder farmers in 8 communities of the Upper East and Upper West regions received farm equipment to help improve their post-harvest fortunes. The communities include Dalasa and Nadema in the Bulsa South District, Yamrega and Awaradoni in the Talense District, Tarekom and Gbango in the Boko West District, all in the Upper East region. Farmer groups in each of these communities were given a weighing machine, 2 roller planters, and tarpaulins. In the Upper West region, smallholder farmers in communities such as Nanchala and Sakalu in the Sisala East municipality also received the same donations. However, the Gbango community in the Boko West district was also given a multi-purpose thresher for threshing grains. A senior research scientist with the Savannah Agriculture Research Institute, Manga Station, Dr. Julius Yirzagla, said it is hoped that the equipment donated will help the beneficiary farmers to standardize their operations.
We noticed from our interaction with you that you needed those things. You need pick sacks to store your crops, and you also need weighing scale to make sure you standardize your weights when you are sending them to the market.
Well, Albert Soy bringing us that story from up north ahead of Farmers Day and in the marketplace. Thanks for watching, everyone. My name is Daryl Kwawu, and enjoy your weekend, which starts early, beginning tonight. Goodbye.